Hi, Ahmed. Can you hear me?
Hello,
Hi, Ahmed. How are you? I can't see you.
I'm
Hello.
trying to access my camera.
Thank you so much for joining in today, Ahmed. It's kind of a big deal because it's our first episode of the first podcast from Yabx, and I'm very excited to, have you on the show. Do you know the name of the podcast?
No.
The name of the podcast that we have till now decided, agreed upon, is that
Hmm.
it's going to be called The Tech Behind Debt. Because first of all, we are going to talk about debt and how we integrate tech to solve the problems that come with debt.
A good name though. Tech behind debt.
Yeah. So tell us
Very
a little
good.
about yourself, Ahmed. For whoever is watching, you've been you've been in this industry for a long time. You have also worked with Tala, and then you have been working with Yabex for some time. So tell us a little bit about yourself. Yeah.
That's great. Great. Thanks to Hina. So, like you said, my name is Ahmed.
Hmm.
I've been in the industry for 10 plus years now. Two and a half of them spent at Yabex, which I am here currently. I was previously with Tala, Kenya, and before that, Tala, Tanzania. I did most of my career with um, Airtel,
Hmm.
a telecommunication network for on Tanzania. And yeah, my overall my career has been kind of very dynamic, to be honest. I started out in finance, and then later on moved to revenue assurance, and I joined the Airtel Money team as analyst and operations guy. We did quite have some fun there, but a lot of learnings, to be honest, because I mean, mobile money is a vast. I would say it's like a beast with a vast knowledge. You get to learn so much, and you get to adapt so much, and it's like the centerfold right now for our changing economic environment. Not right now, since then, but now it's really taking shape, and we could see that we're moving into that aspect, that mobile money it sort of carries whatever, everything that we're doing. I want to purchase a bundle, I need mobile money. I want to purchase airtime, I need mobile money. I need to send you money, I'll need to use mobile money. I have bills that I need to take care of, I will use mobile money. Any type of use case you can think of it, even if it's transferring money from Tanzania to abroad, I'll need mobile money. It's the easiest convenient way. Instead of going to line up in a bank or line up in like an IMT solution-based business, I would just need to fill my mobile money and everything is sorted. Yeah. Over some time now, I would say my career has been divided into two main aspects of one, the telco and learning mobile money. And now I'm branched into credit. And a lot of that is owed to my current and previous employer, which I got to learn a lot of things. Yeah. So it's a good space to be in. I hope that
Right.
explains that explains my career. I try to really
It kind of
summarize it.
explains, and that's the reason why we've had you on this show, because we are planning to discuss a few things which are apparently quite basic when it comes to people like you or me who has been working in this industry for a while now. I was reading that the growth rate of unsecured loans has surpassed the growth rate of personal loans in India, but also in the US. And that has been happening since 2017, or like since 2017 to up till now. The space of unsecured lending has been growing vastly. So I
Hmm.
thought it's a very good time to start from the basics, basically foundational conversations about what is it that we are doing and why is it very important. It's not really about what we are doing, but why is it basically very important. for the economies of emerging markets and the world itself. The first question that I'm gonna throw at you is what is an unsecured loan, Ahmed? Why is it growing at such pace, and why do you think it is important, especially in the context of Africa?
Perfect. That's a very good question, Tikina. I can divide that into two things. Yeah. One is the traditional unsecured loan that we're so used to, whereby I don't need any collateral rather than an assurance of an income. And then we have the emerging unsecured loan or line of credit that is now sort of rapidly spreading. Yeah. Not everybody has access to banks. Yeah. We have a lot of the unbanked population, like you said, in India, in Africa. Most of these developing countries, not everybody can go and walk into a bank and secure a loan, but there are a lot of people out there that need a facility just so as to improve their livelihoods in one way or the other. Could be business, could be just to take care of a bill, like I say, could be to purchase something. But all in all, the need for that product is large. An unsecured loan, in my case right now, is the availability of a non-collateral credit line or facility to the unbanked population that's available out there.
So why is it? Because banks are the biggest players in this field. So how come banks don't have the ability to serve all of them, like all the population that is that wants a loan? I would like to actually frame this question a little bit differently, and allow me to do that. I was looking at the timeline of unsecured loans, especially in South Africa, and I chose South Africa because apparently the most amount of loans have been taken out in South Africa, which is 86% of the entire population resorted to loans. And I found out that until 1992, blacks were not even allowed to take short term loans. In 1996, 1992, blacks were allowed. In 1996, big four banks, which were the Absa, Standard Bank, and I think African Bank Limited, these banks got into the market to provide unsecured loans to these low income individuals and businesses. And within by 2014, African Bank Limited defaulted, and a lot of banks got into the market and came out of the market from time to time. They got into the micro lending market and they left the micro lending market. Again came in, again left. 12, the demand for loans again increased, but again in 2013 it decreased. Again in 2014 it increased. The demand and supply for only unsecured loans, it increased, and again by 2022 it decreased. So my question to you is, why is this market so unstable? Why are there so many discrepancies, especially from the supply side of things? I understand there were a few financial crises in between. There was a 2008 financial crisis. There was a dot-com crisis that happened. But why exactly were banks not able to serve this huge population well?
Good question. And I think some of it has been answered based on what your analysis tells you. Yeah. So from the bank's perspective, providing an unsecured loan, you will need to provide some sort of, like I said, proof of income, or obviously there's a design around it. So it depends on what requirements are there. And when you look at the population largely, not everybody can provide that information, or not everybody has that information. Not everybody has a job that's paying them enough to be able to secure an unsecured loan from a bank. Not everybody has a business that can be able to be documented, because you might have a business, but it's not documented. If you have a business that is documented, only then you can secure a loan from a bank. I just can't walk in a bank and say, I have a kiosk that's earning X amount and I'm getting profit of Y amount and I'm asking for this loan so that I can facilitate my business and grow it further. They will need numbers. They will need some sort of evidence that, hey, this guy is actually doing a business. So not everybody has that capacity to provide that information. That's one. Two is the demand of the provider. Yeah. You mentioned a few banks, yeah, that came in, came out. It all depends on, first, how are they lending, who they are lending to, and their appetite. I would categorize it into those three things. The time at which you're lending also facilitates how your business will be run. For example, when the economy is good or when the economy is opened up, you lend out to people and you have some sort of assurance that you will be repaid. But if the economy is hard, even you and me will have our own priorities, right? A lot of these unsecured loan from the financial institutions end up falling because you end up maybe giving loans to the wrong customers. They end up not paying you. It does not make business sense anymore. So you will see that, okay, my appetite is now decreasing, or I would rather stop and redraw my plan, go back to the drawing board and provide a much more secure facility, not only for the customer, but for me, that will make economic and economic sense and profitability. So again, it should be a win-win situation. It shouldn't be that the financial institution is losing and then the customer is gaining. Because yeah, everybody wants access to money, but some of them, if you give it to the wrong people, they won't pay you back and you'll end up in losses. Yeah.
The people who need these unsecured loans uh, are anyway a very complex market, are very complex customers in the sense, as you said, that they do not have proper documentation to prove their identity to you, first of all. And secondly, what is also interesting is that when it comes to unsecured lending, obviously you can take big ticket sizes, but the demand is for small ticket sizes, high velocity loans, which means that they need very small loans and they need it again and again and again. So
Correct.
For traditional banking or for traditional banks to provide that kind of infrastructure, we require tech to be integrated into the system, because loans like this need to be provided at scale, because it needs to happen so fast, so quickly, within 7 to 15 day periods, that you can't really do it on a human level. So
yeah,
just for the scalability purpose, it is probably important that banks integrate some sort of infrastructure that will be able to, which is also something that probably banks at this point of time look out for. Even though you want to drive financial inclusion, you need to do it responsibly. You can't just provide loans to people because there is a demand for it. You need to, because what I was also seeing is that the balances, when these banks had started providing unsecured lending to these markets, the outstanding balances increased exponentially over years. So obviously it is not a good idea to provide, because people are also falling into debt traps. So it's a lose-lose situation for banks and the end customers. So as you said, that the solution to this is going to be digital, and digitally you can kind of assess a customer. But how do you assess a customer? There is this very interesting keyword which is being talked about a lot in the space, and that is digital footprints or alternate sources of data. So when you so there is a new way of assessing these customers today, and which is the alternate sources of data. You take the alternate sources, which means that you take telecom data, you take wallet data, and then you assess the customer, because they don't have proper identification proof to even to validate themselves. My question to you is, how useful is alternate data? Is it how useful it is to securing the positions of these borrowers, and how accurate are they?
I'll start with the previous, that you as Tuhina, you're coming to my financial institution that is mostly analog. You're providing me information about your business or your your job and you're asking for an unsecured line of credit, I'll go through that information. The only data points I have is that Tuhina has a job or has a business that earns her, let's say, $100. And from that, I need to determine how much I can give her. And the certainty I have it is that she either has a business location in Y district or she has a job because her employer is giving me a letter. Those are, I'm not saying that it's limited to only two, but it's an example. Now, same to Hina, who has been using, let's say, telecommunication and mobile money for the past, let's say, a year, right? There is so much you can get from what you've been interacting with as a mobile money customer or as a telecom customer. Yeah, I can tell that how active you are in calling people. So you're not a dormant person. Okay. You calling and receiving people, it means you're a social person. It means you're actually engaging. If you're telling me you have a business and then I
You make
can't
calls, yeah.
determine who you're calling or receiving calls, probably the whole month you haven't received any call. Are you really doing business? Right? You might be lying to me, but your telco data points will tell me that. How social are you? Do you move around? You can't be somebody as a business person or as even just a normal person and you don't move around. You're just in a dormant one place location all the time. Do you move around? How social are you? Are you moving around and interacting with people? Probably during your interactions, you're finding things to do, and that's why you need my loan. Yeah. Now, when it comes back to now your mobile money data points, is your wallet really active in the past year? How active has it been? What have you been doing? Have you been purchasing bundles, or have you just been sending money to your friends and family, or you're just receiving money? That's an alarm already right there. That Tuhina is only receiving money. She's not sending money. So every time you're receiving, you're cashing out. You're receiving, you're cashing out. So it means maybe if I give you my loan, you'll receive it and you'll cash out and you won't come back, right? Um, uh, what type of use cases are you interacting with? All these data points help me to categorize you into what type of customer you really are. And they will tell me exactly how much is your inflow, how much is your outflow. And from there, I can determine actually how can I lend to you. If it's alarming, like I said, there are a few things that we look at and they would raise eyebrows and be like, no, this customer. Obviously, this is all digitized and automatic. It's not like a person goes in and looks at each and every customer. No, it's a whole algorithm built together that can determine this, and it's always adaptive, right? It's not the same thing that's been used over for years and years and years. Again, customer behavior changes. The customers in Tanzania are not going to behave the same way as the customers in Kenya or the customers in Uganda or whatever. The customers in India are not going to behave the same way as the customers here. There's that sort of every country or every location has a different way of behaving. So from there, you can determine what type of behavior these customers are bringing in, what type of movement of funds they have, what type of use cases they use, what type of communications they do. Is it random? Is it a certain pattern? You can even tell if somebody, what type of job they're doing from just looking at what you said, location. If you have access to location, then you can do that. And somebody is telling you, hey, I'm an Uber driver. And they're always in one location. Are you really an Uber driver? Yeah. So all of this would determine exactly how you lend out to this person. Are they safe? Are they not? Again, it's all like a scorecard that needs to be built around. Obviously, it depends on how you're doing it. If you're doing it alone or with partners, your partners obviously will provide you that, hey, these are the parameters I need to look at to be able to determine that this person. Then obviously there are add-ons. And like I said, it's adaptive, different types, different times. For example, right now it's December, yeah? Your data will tell you that this person is approaching December, yes, but in December, our money movements tend to change. They either increase or they decrease. Yeah. Most likely it increases because in December, that's when you want to do shopping. In December, that's when you want to go out, you want to travel, you want to what. So obviously you'll have a lot of calls, interacting with people, wishing them well on the festivities and all that. So you might see like a sharp increase, but actually it's not that this person has somehow is generating more income. No, it's just because probably due to seasonality, the pattern has changed. So you need to adapt to that. You might say, hey, this person I can lend out now $300 instead of $100, but actually it's the same $100 person that you can lend out to, but he's giving you a shift, and you need to adapt to that, and you need to know that. You might give them $300 and then they will take it and go for holidays and they won't be able to pay you back once they're back, or you start, yeah. And then in January, you'll see a downfall because everybody, January is the hardest month, yeah, at least here in Africa, that's what we call it. So you'll see like a very, very steep dip coming in, especially when it comes to money flow and repayments, because we tend to prioritize other things. I have a loan, but I would rather, if I have school fees or bills to pay, I would rather prioritize that first, and then later on I'll take care of the loan. Yeah. So if you lend out to the right people, yes, you will get your money back, but you should expect such shifts, depending on what time it is or the year and the economy that they're in. So all this tells you that. So yeah, to your point, data is very, very important in such business. It determines, one, what type of customer you have, and then the other things follow.
Very interesting. That's very well put as well, Ahmed. Like, I also think this is the only way we can, at this point of time, attain inclusion of people eventually, and that to do it sustainably, because you're using data to give out loans, and you're being very careful with the way you're giving out loans. You're providing a certain limit to, you're not giving out loans just because you should give out loans. Basically, it is very carefully regulated, and such models are very important even for the future. And that brings me, it was not there in my list of questions, but as now we are standing in December 2023, what do you think is going to be the nature of digital lending, cloud based digital infrastructures, or how do you see that changing the face of the banking industry? What are the kind of predictions that you might have for the next year or for the coming years? And how do you think it is going to be more and more relevant?
Good question. So, being that we're approaching almost the end of the year and we're getting into another year, and right now I would say the banks are waking up, being that the customers are actually these digital customers. The usual traditional customers that would go to lend out in the bank, yes, they're there. That product is still there, and people are using it. Yeah, I have people who are using it. So it works for a certain set of people, but the majority unbanked population has a demand that needs to be catered for. In Tanzania, for example, we have a variety of products available that are digital lending products. And you'll see that each of them, depending on the construct, customers are using. You know? So the best way to do it is to tap into that space and provide such services to customers. Again, it's not going to be an easy journey. It's going to take a while, but I feel like it's already shaping up and banks are adapting. I like the partnerships that are ongoing. We have banks partnering with telcos so as to service the customers. So those are very good. Those are very good moves to make. So yeah, it's gonna be an interesting year next year. A lot of things are gonna take shape.
So you mentioned partnerships. Can you give us a little bit of an idea of how these partnerships work? One way is to be a lender ourselves and provide loans from our books, but we don't do that. So how, and first of all, why don't we do that? And second of all, what are the kind of partnerships that we engage in? And why do you think it's a better alternative to not be a lender ourselves and uh, help the real lenders of the economies to scale to newer customers?
Mm, mm. Okay, my first answer to that is if you wanna move, yeah, you can move alone, but if you wanna go far, you need to move with people. Yeah. I'll give an example of us. The stuff that we do, you'll see that telcos need to merge with us so as to get our services, and banks need to merge with us so as to get our services. If you want to do everything, like for example, just decide to do in-house, you're the loan provider. I mean, you are the credit provider, you are the platform provider, and you are the one providing the customers, meaning you're the telco. Yes, it's possible. Anything is possible, but merging out with people provides ease. One is, let's start with the regulatory space. For you to do everything means there are more regulations pertaining to you. Okay. But merging with people, it means there is some sort of dependency there that eases up that compliance aspect. When you move to the risk now, you're spreading the risk. Yeah. I don't have access to millions of customers. I would have a platform, but I don't have access to millions of customers. Who has that? It's the telco that has it. And again, I don't have access to millions of dollars to provide to customers as credit. So who has access to that and is regulated and is allowed to give credit? The banks. So why not merge together to provide such services? So you'll see a lot of these partnerships taking shift. I would say a few years ago, such partnerships sort of
Yes.
were very minimal or were not existent at all. We had telcos merging with platform providers who maybe are funded by investors. Yeah, you had technology platform providers who, because they have already been funded, do not want to merge with telcos. They will just like provide loans through an app. But it's the same guys that now are shifting into this type of business. They would look for a bank to merge with so as to provide. They would look for a telco to merge. So I feel like the dependency is there at a large scale still, and there's a lot of space to be explored for all these three types of people.
Ahmed, the kind of literature that I have read, I couldn't find a crystal clear answer to the question that is unsecured lending good for an economy or not. I couldn't find a straight up answer to that. And that's
Hmm.
probably because of the high borrowing costs and the fact that borrowers have to pay within short time periods. So the ability of an economy as a whole to grow depends on its ability to save. But if majority of the borrowers in an economy is always trapped in a high credit cycle, how will they benefit from such a model, and how eventually an economic might benefit from such model? So if I have to reiterate this question, why do you think unsecured lending is good for the borrowers of the economy?
Hmm. Okay. I'll start with the borrower. Yeah. By the way, I think it's good for both the borrower and the economy. Why the borrower? I, as a borrower who doesn't have access to other lines of unsecured lending, I probably have an idea, right? I want to open up a small shop, or I already have a small shop and I need some sort of injection of capital. The only access I have to a line of credit is one, call my friends and relatives so that they can provide me an unsecured line of credit, which has been a traditional way. But again, the economy is hard. Not everybody has money to give it to you at a different point in time. Probably they're going through something. Or so what's the assurance? If I have an app or I can dial in some sort of code and access a product, I can be able to take that loan. Yeah. Why it's good for me? Because yeah, if I get the loan, it means it will change or impact my life in one way or the other. But remember, what we're trying to drive here is the behavior. Okay. And this sort of answers your question on now it's becoming that you're trapped in like a silo or in a circle of
Credit.
unsecured debts, yeah, and credit. We try to promote good behavior. Why? Because I might be eligible to $100, but I won't get $100 at first. I'll start with a low limit and I'll start building up that high limit that I deserve. Through that journey, both the provider and the customer will learn from each other. Yeah. They will build on each other. The customer will generate a sort of behavior that is good for lending. I admit there are customers who are using this product in every other opportunity that they get. Yeah. If I have telco A, telco B, telco C, providing loans, I would take all of them as long as I'm eligible. Remember, we're dealing with a multi-SIM network or multi-SIM environment, whereby I have SIMs for every other telco that's available there. Now, one is I'll benefit it from the behavior aspect. If I use it properly, it means I'll create a very good credit behavior, which can be proved because there is data. Remember, we are reporting to the bureaus and whatnot. From there, I can be able now to determine that, remember, I'm the unbanked guy. From that data, I can go to the bank and say, you know what? I do not have X and Y things as you require, but I can prove my worth through this data. And I have whatever documentation that you need, but through my track record, you can see that I'm a good borrower and I can have access to that huge loan that I've always wanted so that it can make a life-changing impact. Again, if used correctly, yeah? Now, when it comes to the services provided, I can be able to access services. For example, in cases where I'm not doing business, I just need a loan to be able to take care of a need that I need. I need to do right there. I need to call to Hina. I don't have a bundle. And I'm inside, it's raining. How do I access the agent or how do I access to the shop to get the voucher or be it a scratch card or it's loading my money into the phone and see. But if I have access to like a quick unsecured loan, I can be able to do that at the touch of my fingertips. And later on, when I have access to move or the mobility to move, I can recharge and this loan and repay this loan. Yeah? Now, all this on the customer base, it provides convenience. I can be able to pay my bills. I can be able to build a good track record. All these sort of good things if used correctly. And majority of our customers are using it correctly. Now, when it comes to the economy, there's more money movement, yeah? I want to send money to Hina. I want to send money to my friends and family. I can access an unsecured loan, quickly send it, later on recharge, repay that debt. I want to probably have access to money at certain points so that I can do maybe as a business or just a personal thing I need to solve. I'll just go cash out whatever cash loan I can get, cash out the amount, do that, later on, secure the money, pay back. All this movement is generating some sort of revenue. Yeah.
Yeah.
Now we're moving from the customer, we are going now to the service provider. Okay. If I'm buying a bundle, there's a tax implication there. If I'm sending money there is, yes, a tax implication, but also that person I'm sending money to is receiving money and is doing another service or another use case. And they're also generating some sort of revenue, either, yeah, through service charge to the telco provider or VAT or taxes through that transaction. So the service provider is gaining, the government is also gaining, meaning if it promotes more volumes, we are promoting more revenue and more taxes, which in the end contribute to an economy. And an economy that grows is an economy that moves. If these services are not there, where will these guys get money to do such transactions? Meaning they'll have to ask somewhere else. But if that somewhere else is inconvenient, then it becomes hard to do such transactions. Yeah. So somehow, yes, if you look at it, I'm just providing loans, I'm giving it to people, I'm helping them out with their needs and services. But when you look at it at an in-depth review, you're actually contributing more than just giving out a loan. Yeah, you're generating sources, more lines of revenue or sources of income for different sets of people at a personal level, also at a business level as well, and going up to now at even government revenue. So economically, it's good. And also at the customer level, it's good. At the customer level, just being careful that we need to set it to the right customers. We don't need to give out people more than they can actually afford to pay. And now, me being a customer, if I'm not using a product because I'm working for a credit provider. No, I'm using a product. I've been using products since I wasn't working for a credit provider because of the convenience. The first time cash loan was introduced in Tanzania, I was like, okay, mid-month, you need to sort some things. You have access to a limit. Why not use this? You take, you sort, end of the month, you get, you return. Yeah. So it was that convenient. Sometimes you need to pay for electricity or water and you're short. You take a loan, you pay. So it's been convenient in the, I would say, in all life aspects. So it helps.
You might read a lot of research papers, you might read articles, you might watch videos, whatever. But I think the kind of insights that someone from the industry can give you is very useful. It's very insightful, and that's basically the reason why we wanted to start this podcast. And I would like to thank you a lot to give your time to this. I'll see you soon.
Thank you very much, Tuhina, and thank you for hosting me. The grand opening, and it's a pleasure being here. Yeah, but to more invites and having these, I wouldn't say tough talks, but very, 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 very useful and educational talks. Always a pleasure.